How are banks assessing the loans to small enterprises, and what are the sort of rules they're undertaking?
Well, we've been, all of us have been in this business for a very long time, so we can compare previous cycles. Now, if we compare, say, to 2 or 3 years ago, when things were going very, very well in the economy, money was extremely easy to get, and there were plenty of banks providing business or small business with equipment finance or the finance facilities that we deal with. That market shrunk from, say, 20 down to 8 main players. There's less competition. The ones who are still in it are risk averse. They're concerned obviously about a slowdown in the economy, but what they're doing, or potentially what they could be doing, is by not lending to small business or being tight with their money to small business, they're actually possibly creating the conditions that they're seeking to avoid. So the ability of small business to get equipment finance or to get finance approvals for expansion is extremely limited.
When I go in, I'm a small business person. I go into the bank and I want loans for equipment. What sort of criteria are they saying to me I have to meet?
The first question that they look at is, what exactly do you want to finance? They're placing far too much emphasis on the salvage value of the equipment, on the with the view that you may fail. And if your business fails, they're far more concerned about what they are likely to recover from that asset than they should be. What they should be doing, in my view, is putting far more emphasis on the calibre of the applicant and far less emphasis on the quality of the asset as far as its future value is concerned.
So what sort of equipment do they finance and are happy to finance, and what sort of equipment won't they finance?
Motor vehicles are fine out there. Everyone will do a motor vehicle because it's got good liquidity in the marketplace. If they have to repossess or have to take possession of a motor vehicle, it can go to auction. It's a reasonably easy access route. Anything that's got difficult second-hand value, that's not going to be easy to sell, it's going to be very hard to find.
How would you go getting finance for a shop fit out?
Almost impossible.
Well, virtually impossible.
Because you can't sell the shelves in that way.
No,
Yeah.
but what that ignores is that the fit out's necessary to run the shop. Now, and the whole premise of equipment finance is that the income generated by the asset is going to pay the payments for the asset. It's very simple, and they're not placing any value on that. Now, people who are in business don't do this to lose money. They do. They know more about their business than the bank is ever going to know, with all respect to the bank. And if they've done their own due diligence and they know what they need and they know going forward that they can afford it and they've budgeted for it, then the banks aren't taking account of the acumen within the business owners or within the business. They're just taking a pure risk position on the asset itself.
And I think it's very important that to understand that most small businesses out there these days have to guarantee their loans, and most small businesses out there have to have their house as security up there.